This dividend achiever is on clearance, and it's one of my highest conviction investments for 2021. So what is it? First off, for the disclaimer, I am a business owner and a YouTuber, not a professional financial advisor, so this is not financial advice, just edutainment. Please do your own research before investing at your own risk. Anyway, I'm Joshua. Welcome to Milk Money, where we learn to make our money make more money. And the most tried and true milk money method for long-term results is buying strong dividend stocks when they're on sale. Value investing is hard in this market when the Shiller PE ratio is higher than any time since the dot-com bubble, but I did think I found a killer value play that I will be loading up on over the next few months or so. If you want to be the first to hear of other value plays I uncover, make sure to like and subscribe to this channel. LMT, or Lockheed Martin, is a dividend achiever with a 3% yield that is trading at $80 below my estimate of its fair value. Sounds like a home run, right? Maybe. I'm going to get into the bear case first and then review the stock's fundamentals, growth, and valuation, and then dig into the charts for a buy target and some option strategies to decrease your risk as well. So let's get into it. Lockheed Martin is one of the leading defense contractors with a $95 billion market cap, and it's known for its fighter jets such as the flagship F-35, which is one of the largest weapons programs in history, which should be locking in revenue for the foreseeable future. Also, they are very strong in the missile defense industry, which has been declared as a major priority of our national defense strategy. And lastly, they are expanding in the space sector, which could also add a small pump-a-mental hype boost if Cathie Wood added LMT to her new space ETF. So if it's got such a great product, why is it so cheap? Let's dig into the bear case to see why and try to decide if this causes great concern for the future or if it's just a temporary stock price crusher. As a value investor, I want to bet on beat up stocks, but not beat up companies. So for the bear case, why is LMT down? First off, the market is all about growth, EV, and hype stocks. Blue chips in general are a little bit out of favor or at least lagging behind, but there is some legitimate political risk to this stock. First off, there's always uncertainty with the new administration, and with the Democrats fully in control, some may see that the Democrats would be less likely to push defense spending. However, it is rare that any government in the past has actually made major cuts to defense, as it remains very unpopular. So even if the Dems have a reputation as being less hawkish, I don't think politically they are motivated to make major defense cuts. If you think I'm wrong or have some insight on this, please let us know in the comments. A bigger threat to their budget is the simple need for some austerity after record-crushing COVID and stimulus spending. This level is definitely not sustainable, and if Congress needs somewhere to cut, maybe one of the largest line items of defense could be a target. At the same time, it's hard to imagine an ounce of austerity coming out of this political regime. The F-35 has had some production slowdowns and cost overruns as well, which is a legitimate concern in the ability to keep growing earnings going forward, if that trend were to continue. So let's dig into the health and fundamentals of LMT to see if we have anything to worry about. The current ratio is 1.39, with LMT having $50.7 billion in assets to $44.67 billion in liabilities. Not a great amount of clearance, but they could definitely cover their obligations, so it's really not much of a concern. They also have a very strong $6.4 billion free cash flow amount this year, which has been in a steady uptrend over the last few years. So their dividend should be very safe, and so should the company in general. Now for the growth. As an established giant in its space, you can't really expect huge growth, even though they did have record sales to end 2020. And analysts are expecting earnings per share growth of 4.6% for the next 4 years, which I think is okay for such a large and undervalued company. So it seems we have a quality dividend company so far. But the valuation is what makes this investment a no-brainer to me. Lockheed is buying back shares steadily as well, and so their buyback yield plus their dividend yield gets you a 4% return. Plus, the 4% earnings per share growth and an 8% annualized return should almost be guaranteed. But we are also at LMT's lowest PE ratio in years, 4% below the industry average at 13.9. Bumping the PE to just 16.4, which is 1% under the industry average, gets you to a $433 stock price. And the average analyst price target is $422, with simply Wall Street giving it a fair value of just over $500. So if LMT is able to avoid the budgetary risk, then there's some huge upside and a quality dividend that could pay you while you wait. Looking at the charts, you can see that it has been in a downtrend, so you might want to dollar cost average in or wait to see if consolidation or a new uptrend appears. In the short term, it looks like a possible break of the downtrend, so I'm going to be watching to see if that gets confirmed. In the meantime, I typically try to wait till it gets to the bottom of its lower trend channel, then I sell puts, and then when it bounces up to the moving average, then I can buy those puts back and kind of ride the downtrend. And eventually when it gets put to me, I'll be relatively happy that I'm buying a stock that I think is already at a fair value while also getting paid along the way to lower my cost basis. Recently, this small pop that it's had over the last week might just be a temporary blip on this steady downtrend, or it might be the start of a consolidation or bottoming pattern. So I definitely would be keeping an eye on it right now. Anything in the 320s would probably be a great price, but you don't want to catch a falling knife, so you definitely want to watch this. I think if it dips back under the 320, I'm going to consider starting a position officially, and then wait to see the stock kind of balance out and create a sideways consolidation or an uptrend again before I put the rest of it in. But in the meantime, selling puts is a great way to get you ready to start a position. Since this is a higher price stock, it might be hard for you to buy 100 shares. So I might start with 50 shares instead of 100 and maybe buy a 2-year leap to write covered calls against instead. I always like to have 100 shares so that I can write covered calls, but with a $340 stock, that's going to take a lot of capital for a lot of people. So because this is a long-term investment, I definitely want to have actual shares. But if you are really betting on a short-term fair value catch up in price, then maybe you want to exaggerate that appreciation by buying a leap and maybe doing a poor man's covered call where I have one leap to give me control of 100 shares and then selling like 15 delta covered calls against that. Could be another way to kind of enhance your return. But either way, if you just want to keep it simple and buy shares, I don't think you can lose at this price. And if it gets even cheaper, if this downtrend continues, then you're just going to be getting an even bigger bargain. All right, so in summary, budget cuts could definitely cause some more pain to the LMT price. So that's definitely a risk to keep your ear out for. But one of the benefits of LMT in this overinflated market is that it should be more insulated from a crash than other stocks, since it's an undervalued stock right now. If the story changes, we can get the company back to fair value, and at any time we could wake up to news of North Korea testing a nuke, Iran threatening Israel, or China flying jets into Allied airspace, and we'd get a huge interest in the defense sector again. And as a value investor, we want to be there before that happens. So that's why I'm looking into starting a position very soon. So let me know what you think. Is this a buy for you? Is there something I missed? Let me know in the comments below. If you'd like to learn more about crypto, value stocks, and growth stocks, please like and subscribe to my channel. Again, I'm Joshua. Thanks so much for watching, and I'll see you in the next video where we learn to get rich the milk money way by making our money make more money.